Good morning, ladies and gentlemen, members of the board, esteemed shareholders, senior colleagues at the bank, auditors, everybody present here. Thank you, Mr. Chairman, sir, for the inaugural address and setting the tone for today's deliberations. I'd like to just take the brief opportunity of sharing with you the merger, the benefits we will see from the merger in the days to come. There are a number of doubts in people's minds about the losses posted by the bank over the last 4 quarters, and like to set right those opinions and feelings about the whole matter. Now, before that, I'd like to start with Dr. Rajeev Lal. Though he could not be here in person, I must say that he's definitely the founding light of this company. People have talked about the fact that there is a lot of infrastructure loans in the company and we've had to take losses in the last 3 quarters. But I must say that but for Dr. Lal, there would be no IDFC Bank in the first place, and therefore there would be no IDFC FIRST Bank. So, my very sincere thanks to Dr. Lal and the entire senior management team who conceptualized the bank and under very difficult circumstances got the license for the bank. As all of you know, getting a bank license in India is an extremely difficult task. And in close to after about 10 years after the licenses of Kotak Mahindra Bank and Yes Bank were given, only 2 bank licenses were given and our bank was one of them. So thank you very much, Dr. Lal in absentia, for all the work put together. Number 2, during the period between 2015 to 2018, when the bank was a standalone entity, just a lot of work in terms of building the foundation of the bank, setting the platform, setting the systems, building the initial team, building the architecture, and finally having great corporate governance in this bank. Again, I would like to thank the entire senior management of the bank and the board of IDFC Bank, erstwhile IDFC Bank, who built this entire platform. It was only on that basis that this merger was brought together. As far as the Capital First is concerned, or erstwhile Capital First is concerned, I must say it's had a very brief history of only about 8 years. This company was founded in 2012 by way of a management buyout and a private equity backing. But over the last 8 years, the company has grown a lot. And therefore, around 2017, September or October, when Dr. Lal called me, I don't remember the exact month, we instantly hit it off. There was a need for the bank to retailize as per the stated strategy of the bank. There was a stated need of Capital First to get a banking license. So it became a natural association for 2 institutions to come together. I must also say that there are certain very significant strengths that the bank has, as even at the point of merger. A strong liability franchise, a pan-India presence of 200 branches, a Casa of over 2,800 crores as of December 18, a strong technology platform, high capital adequacy, high corporate governance, efficient treasury management, innovative digital banking and payment solutions, retail lending solutions, rural banking, a strong rural banking, and diverse products across asset and other opportunities. Now, as far as Capital First is concerned, I must say that in 8 years, this company started with a 94 crore rupee loan book in 2010. In 2 years, from 2010 to 2012, the company developed some very unique models of financing small entrepreneurs who were not being financed by the existing banking system and who do not file their income tax returns. And by financing those customers and consumers, the company then grew, and in 7 years, the company grew to a scale of 30,000 crores. So it had a CAGR of 29% of growth, a profit trajectory of 55% CAGR for 5 years, and a profit of 328 crores as of 2018. Now, therefore, when you put the pieces together, you get a strong platform of IDFC Bank, you get the profitability and the retail machine of Capital First, and together we get IDFC FIRST Bank. Number 2, I just want to therefore share with you in the context of the strength and the platform of the 2 institutions, People often ask us, 4 quarters have gone by, you've posted losses, what does the story head from here? It's a common question. I meet people, I see people on social media, I do hear these questions all the time. But I must also share with you, there is one thing people consistently say about our organization, which makes us very proud. It says, everybody says that there is no corporate governance issue in this bank. It is my assurance to you that our results will always be what they will be. They will be reported very accurately, and we have a very good board that guides us on the correct path of corporate governance all the time. Number two, I must say that as the bank continues to grow, it will become very much more profitable. The answer is very simple to understand. Very simply put, at the bank level, our lending rate was 9.5% and our borrowing rate was 7.5%. That gave us margin of about 1.8%, and then we had to make profits out of that. Incrementally, our lending rate is 16.5% and our borrowing cost is 7.5%. Incremental margin is anywhere between 6 to 8%. So when the incremental business expands, automatically the bank will become profitable. So therefore, we're quite confident when we take it forward, we will become a highly profitable bank with a strong corporate governance, which is a big opportunity. In other words, we will be a strong universal bank with great corporate governance and profitability in the years to come. So therefore, if any of you shareholders have concerns about what has happened in the last 4 quarters, let me just say that it was a part of infrastructure loans that had to be charged off because the infrastructure cycle didn't go very well in India. But the incremental story for the organization, because of the combined entity, does look very, very good. Finally, when we look at infrastructure, of course, in hindsight, the banking system is now talking with the benefit of 4 years of knowledge that infrastructure has not been a good story. But back then, when Dr. Lal was building this book, I must say infrastructure was the in thing to do, and they understood as a very much important need of the future. So we never evaluate anybody with the benefit of hindsight. I must say that what has been built is amazing, and together I believe that all of us can build a great bank. I want to very sincerely thank a number of people in this process, every one of your shareholders who gave an approval for us. It was astonishing that we got an approval of 99.98% of shareholders for the merger. It is an astonishing feat, never actually seen in the history of 2 listed companies in India. 99.9% of capital for shareholders approved the transaction. So together 800,000 shareholders, and we got approval of close to about 99.95%. Number 2, I want to thank the regulator, because the RBI was very proactive and very supportive in this entire process. We got the support of the rating agencies. We thank them for that. We got the support of NSE, BSE, SEBI. We thank them for that. We got the approval of the Competition Commission of India. We thank them for that. We want to thank all the auditors and Deloitte who are here with us, who audited us so diligently over the last many years. We thank them for that. And finally, our employees who really had put in amazing amount of work to bring the merger together. I very sincerely thank every one of them for living through a very difficult year and sticking by with us, and I thank every one of you for that. I must finally say that our senior management is here with us, Pankaj Sankleja, who heads the corporate center and the CFO of the bank. We've got Shrishti Sethi, who's the head of risk for the bank. She's here with us. We've got Mr. Ajay Mahajan here with us, who's an outstanding professional and building our entire corporate banking business with us. We've got Mr. Pradeep Natarajan, who heads our entire retail asset business for us, and again has added a terrific value for us over the many years. We've got Mr. Amit Kumar here, who heads our entire retail liability business, and he's the person responsible for building all our Casa and retail deposits, and we thank all of, and we request all of you to keep deposits with us, with Amit Kumar. And we got Adrian Andrade out here, who heads our human resources. We got Satish Gaikwad, who's the company secretary, and we got ma'am, who's there from Deloitte. So thank you, and the board has already been introduced by the chairman. So thank you very much, and I wish all of you have a productive session this morning. Thank you. Thank you, shareholders, for your participation and your questions. We'll try to address all of them right now. Number one, where Mr. Nagabhadra first started off, what is your most difficult target? The straight answer is that we think that to generate retail liabilities and deposits of the scale that we need is our biggest challenge. But while it is the biggest challenge, I can also say that we're very confident of achieving it because I introduced a team here for you. We are setting up branches across the country. We have about 270 branches now. We will take our branches to 800 in the next maybe 4 or 5 years. We have guided for 5 to 6 years, but we think we will achieve that number before time. So when we open branches and we give interest rates of deposits of 7% and we give good service and good customer service, we believe that we will get the number, but it was a challenge number one. Number two, you also asked what is the vision for the bank, Mr. Nagbhadra. So I must say that you're asking us what is the vision and mission for the bank. I must say that we are basically saying that we want to create the world's best bank for consumers and entrepreneurs in this country, right here in India, is our mission statement we are going after. Second thing is that we want to touch the lives of millions of Indians in a positive way by providing high quality banking products and services to them, with particular focus on inspiring consumers, entrepreneurs of a new India using contemporary technologies. So we believe this is what we have stated for ourselves as the vision and mission, and this is something that all our employees are aware of, and we'll work towards it. Now, you also mentioned we are defying Newton's law. We think that maybe sometime you feel the challenges or targets we have set for ourselves. Not only you, we saw Deutsche Bank, we saw CLSA, we saw Morgan Stanley. Many such renowned multinational entities have expressed concern about our targets and have said it is very difficult. In fact, two of them have actually said, including Deutsche and Morgan Stanley, have said that we feel that it will be difficult for the management to achieve their stated guidelines within the 5 to 6 years guidance that the management has provided, and they have said that it will take 7 to 8 years. We are quite confident that not only we will meet it, but we will meet it ahead of time. Now only time will tell whether we are right or Morgan Stanley is right, and I hope we are right, more right than them. Number three, with regard to your question whether cream of India has been taken away. No, sir. India has just started on its journey. When 20 years ago, when maybe 15 years ago, when Kotak Mahindra Bank or Yes Bank came, at that point of time, everyone said that, oh, India has been taken away by ICICI Bank, HDFC Bank, but no, Kotak Mahindra Bank did well, other banks also did well. So like that, India is forever growing. Indian economy will become $5 trillion from $2.6 trillion today in another 8 years. So India will keep growing, more and more wealthy people will get created, poor will become middle class will become rich. We will have banking opportunities for anybody. We don't worry about the opportunity at all. It is only about being able to play the opportunity well in a clean way. Then you also said that will there be any more provisions, but I'll address the provisions question separately. Then the next gentleman asked the question about what is the strategy to increase Casa. I'm happy to tell you that I told you the branches, network and all that, but I'm also happy to tell you that our Casa strategy is already working. Just to share with you, our Casa as of December was 6,400 crores. As we speak, Casa has touched 10,000 crores. In fact, Casa, we are getting year-on-year growth of 64%. 64%. Many people think that Casa generation is most difficult. I told you Morgan Stanley, Deutsche Bank, CNBC, Lata Venkatesh, everyone is after us saying that it's very difficult. But they will all be proved wrong, I'm assuring you. And I can tell you that this Casa is, we have guided that we will touch 30% in 5 years. I can assure you, I'm quite confident that we will reach there ahead of time. Next is, you have asked some questions about infrastructure loans. Many of you raised this question saying that we have a large infrastructure loan book. Do we have more problems coming? I understand your question. And let me just say that we identified these two accounts. One was Divan Housing and the other being Reliance Capital. Together we had exposure of 1,500 crores. We have in the first quarter, in the March ending quarter, Q4 of 2019, we have provided 15%. That is, we have taken it to the P&L. This quarter, we have taken it to 75%. After taking it to 75%, we don't expect any problem from these two accounts. As far as other infrastructure loans are concerned, we are carefully watching it. We don't see any new problems coming at us as expected. Well, this is a business. We have a 20,000 crore loan book. Some account may come from here or there, but there is no big account that is expected to come and affect our profit and loss account in the years to come. We also expect that this loan account of 22,000 crores will become 0 crores in the next 5 years, and we will actively work towards that. If at the end of 5 years anything is still residual maturity is there, we will actively sell those loans and make it 0. Now, the next question was asked by I saw Mr. Srinivasan, I saw Mr. Gopal Kumar. We just got so many of you who expressed concerns that the share price has not moved, and you are very concerned about it. We understand your feeling. We empathize with it. We, as all of us as management here and all of us in the board, we assure you and we commit to you that we will work very hard that this over the next 5 years you get to see appreciation in your shares. I don't take this lightly at all. It is not for my personal wealth, but I take the wealth of all 800,000 shareholders very sincerely. Whenever we work, we think of our responsibility as not managing ourselves. We carry on us the responsibility of 800,000 shareholders. I assure you that, and all actions we take in the bank is in line with that. On that, you wanted to know what the quarterly results are, and one more gentleman after that asked us why we posted loss this quarter. I described the reason to you. There were two accounts which deteriorated very sharply during the last quarter. Some of you asked us question as to why you did not identify this issue before merger. At that time, these two accounts were not that bad accounts because merger was announced in January of 2018, and at that time, neither Divan nor Reliance Capital were in bad shape. In September of 2018 is after ILFS issue became the big issue, then many of these accounts became an issue. So it's a very late stage. We had to react to it. We found that we had to take the provision. That is why you see the loss being booked. So therefore, that is the reason for that account. I have described to you a very simple formula on this issue. On the wholesale loans, our average yield was 9.5%. I am just sharing with you that all incremental loans we are doing in wholesale business, we are doing business between 10.5 to 11%. So naturally, the yield of the loan book will increase. As far as retail business is concerned, I am happy to share with you that our lending rate is 16.5% on an average. Our cost of fund is 8%. So definitely every new business we book in the bank, we are getting 8% new margin. We take an average of 6 to 8%. So naturally, if we in the next 5 years, we book supposing 50,000 crores of retail business and we make 6 to 7% margin on 50,000 crores, you can all count for yourself how much profit can come from that operation. So we are very confident that business will grow, and we are also confident that it's very simple. Today loan book is 1 lakh crore, 1 lakh crore of which about 44,000 crores is retail. We are planning 44,000 crores to become at a minimum 1 lakh crores in 5 years. So extra 60,000 crores will give you margin of another 6%, and that's about 3,600 to 4,500 crores for sure in that zone. Even after operating expenditure and credit losses, there still be a lot of profit to be made. So whatever it is, but in the future, I can assure you this bank will, just by the logic I described to you, will become quite profitable. You will see the progress coming quarter by quarter because we are not doing any shortcuts. We are not booking any loans that is giving us some quick profits. We are not giving, there are many practices in the market where they give real estate loans and they take a lot of fees upfront and book it. Our bank does no bad practices like that. Even if we get any lumpy loans from anyone, we amortize that loan over the life of the contract. So you will not see lumpy behavior from a bank. It will be a steady growth, but I'm quite confident that this growth will continue over the next 5 years if you see it. Now, what is the risk to this strategy? The only thing is timing, because at the same time, while we are going to grow our Casa and we will grow our retail book, I told you margin is quite strong in the incremental business, and even in corporate business, new business is very profitable. The only catch to this is timing, because when we put branches like one of the gentlemen here talked about, yes, it is expensive. And if you put 800 branches, you can imagine how much investment we are making. So for 1 or 2 years, you will see that investment will come, operating expense will come. I'm requesting you to mentally take note of the fact that the bank will be investing and incurring a lot of expenditure on this front. So when we see the profit and loss account for 1 or 2 years, this will be probably, it will become profitable, but not extraordinarily profitable. But after 2 years or so, you will see the profit rising. I can also assure you that I have seen this phase at least twice in my life. When at ICICI Bank, for the first 1 or 2 years, retail business was starting up. It was investment. But after that, by 2003, 4, 5, 6, 7, 8, 9, 10, till today in 2018 or 2019, it is a perennial growth story. Today, I'm told that ICICI Bank retail business is crossed about 3 lakh crores. And when we started, it was 200 crores. Similarly, in Capital First, when that business started for 2 years, 2010, 2011, 2012, it was loss-making. Our company was loss-making in 2010, 11, 12. There was some profit we booked. That is because we booked some, securitization gain upfront and all that. But on the core, but in 2013, when we posted a first profit of 55 crore, I remind you, we started in 2010, 2011 loss, 2012 loss, 2013 loss. But because it was investment, no shortcut, no upfront booking, nothing. But after that, in 13, profit became 55 crore, actually 35 crore. Then 14, it became 60 crore. Then 7, next year it became 66 crore. Next year it became 115 crore. Next year it became 166 crore. Next year it became 218 crore. Next year it became 328 crore. You can see the records. It is there. It is there in the investor presentation on the website. So once the story picks up, it became a one-way track to profits. I am quite confident here also. Once we go through this 2-year phase, then I am quite confident all of you shareholders will see that phase. But you have to bear with me for 2 years, because this is the phase when that investment has to be made for the foundation for the long-term interest of the organization. If we do shortcuts, the shortcut will work for 2 years, but then we all know where that game ends. Now, your question about how much planning we are doing in terms of investments in ATMs. We are ATMs and branches. This year itself, we are planning to add at least, let me say, between 150 to 200 branches this year itself in FY 19-20. And in terms of ATMs, between 500 to 700 ATMs we will put out this year itself. So that kind of investment will go on. Next question on quarterly results, I've already answered that. Significant change of cash flow statement. The key reason for the change is increase in depreciation. There has been a significant change in depreciation due to accelerated depreciation of goodwill and other intangibles arising out of merger. The amount of rupees 2599 crore, such amount is being exceptional in nature. Basically what happened was that Capital First was at a premium to the book value, substantial premium to the book value in the stock market, and at that stock market price, the two companies merged, or a little premium. So that premium was a goodwill that got created from the merger, but that, like Chairman Sir explained to all of you, we chose to take it through the profit and loss account and not keep it on the books, because as he mentioned, that dividend payment will get affected because RBI does not permit banks to pay dividend if such goodwill is kept on the books. So many people of you asked this question about why we are not paying dividend this year. Two reasons. One is, as all of you know, that this year the bank has incurred a loss. Even without, I must admit to you that even without taking into account the exceptional item posed by the goodwill merger of 2,600 crores. Even without that, the bank has had a loss this year of about 629 crores. But and anyway, there is a technical reason with goodwill we cannot pay, and a year in which incurred loss, there is no dividend. But from next year onwards, this issue of goodwill will not be there with us, meaning the goodwill not be on the books because we charge it off. So next year the bank is eligible to pay dividends, and we will always watch out for on what dividend we can pay on the basis of discussion with the board of directors. Our general attempt will be that we reward shareholders in both ways, not just in dividend, but certainly in terms of appreciation. And we believe our work will eventually be appreciated by the markets. Now, in terms of dividend policy, the board will define the dividend policy and pay dividends according to that. Our approach will also be, if possible, to continuously increase dividends year on year. What is the truth of ILFS fiasco and whether bank is impacted by the issue? The answer is no. What are we doing for loans for farmers? The gentleman asked this question. Yes, sir, we agree with you, and we could feel the passion as you were speaking. It's an important issue for the country. We believe that apart from financing corporates and retail and MSME and consumers, which we do, rural is very important for us. We are setting up a large number of branches. We already have 120 branches that we have set up in the rural areas and remote areas. We will continue to expand that business. We will provide Kisan credit cards. We will provide Kisan loans. We will provide tractor loans. We will provide all these. A bank is new, but permit us time, and we will launch all these products one by one. Queries and registered office by Mr. P.V. John. There are employees working from the registered office of the bank. I talked about that, and I apologize to you about the problem, and we have an official response for that. Then view on present auditors. I just want to share with you that I noted the comments about the present auditors. Yes, it is anyway, even by schedule, it is time for auditors to rotate or move out and new auditors to take over. We actually thanked Deloitte for their work over the last 8 years and keeping the organization, accounting for the organization. And we have also received permission from Reserve Bank of India for appointing KPMG as our next auditors. Web AGM, live AGM. Thank you, sir. We hope to reach that stature in our lives to compare us with the names you talked about. And and when we get there, we will get there. But I can assure you, in a trajectory sense, we will think exactly like that. And in any case, it will be, as of today, it is mandatorily applicable to only top 100 listed companies as of now. And you have to pray, we have to pray. By the way, I don't pray for all these things. I only try to work hard. And I just hope that by our hard work and our intent and our approach and our strategy, we will get to that list and be forced to mandatorily do all those things. When will we expect bonus shares? Thank you, sir. We can definitely hope from us in due course in life. And I can also say that your request for gold coins, I think GR Tangamalega is somewhere nearby, and we will do our best to assist you. When the bank will start giving dividends, I told you the answer. How many years the share price will touch ₹1,000, sir? I answered that question to you, that we will work hard and do all the right things, and I believe share price will reflect our work in the years to come. Definitely, I tell you one thing. So I definitely tell you one thing, that our strategy, we believe, is very appropriate for the future. I am telling you, I don't know whether you will be a shareholder from here 5 years from now or you're not. And by the way, this is not a this is not a commitment or a I'm coming. I'm coming to that. So I'm trying to. I understand. I understand your feeling, and I understand shareholders of feelings who have held stock for 4 or 5 years. I understand your feeling. I feel for that. But I can.
Entire salary works, everything, without any doubt, without any delay.
I get that, and some of you also pointed out that Capital First shareholders, why did they merge with this bank? I think they're quite misplaced because Capital First shareholders have immensely benefited from the merger in terms of banking platform. All of you know what's happening in NBFC sector in India, and you should pause and think for a second how this would have looked otherwise. So, and therefore, if you compare Capital First share price come down after the merger, just keep that in mind. Now, with regard to this feeling, like I said, I want to just make a few things to you that not if, I'd say when, our strategy of retailizing the assets, retailizing the liabilities, making profits, keeping good corporate governance, keeping high intellectual property of the businesses we do, growth, when all these strategies will come together, I can hope as much as you, rather, I believe, but I would not like that to make a official record, but I believe the share price will reflect it. Next is audio-visual presentation during the next AGM. We mentioned that. We'll consider that always, sir. Next is section 13 regarding capital adequacy. Okay, there's a typo error of 2010. We apologize for that. We have been advised. We have already been fixed on the website. Whether the bank is considering urban areas or rural area, we talked about that. It's of course, we want to do both, and rural is very important to us. What are your plans to recover NPAs? We are making every effort to recover from the NPAs. It's a continuing procedure. There's a full-fledged legal team, there's a collection team, there's a recovery team, and we pursue all borrowers till we get our monies. Now, I am broadly done with all the comments that I could pick from here. Manik Saab, you... Pardon me, sir? Oh, I'm coming to that. I'm picking you out for special mention because you asked many unique requests, including gold coins. So we figure out how to give you gold coins from here. So you talked about giving special rates, for shareholders to tie up with insurance companies, special premium. Actually, we like that idea. We want to work on that, and surely we will think about that. Next question is, how will we get affected by competition, Bank of Baroda and everybody else, new banks? I must say this to you, that definitely there are very strong players in India who are all in the same space. ICICI Bank is an extremely good player. HDFC Bank is a very good player. Axis Bank is a good player. Kotak Mahindra Bank is a good player. There are just so many fantastic banks. State Bank of India is fantastic. Bank of Baroda is good. There are so many state-owned banks. So there really is a very vibrant market, and there are really good players. And you're right that there are well-entrenched players who are already there with good systems, good technologies, good websites, good mobile apps, good customer relations, employees spread over the country. They have already amortized that expense over the last 15, 20 years, and therefore the profit and loss today is looking good for investments they made 20 years ago. It is true, but we should not get disappointed by that, because if by that logic no new bank can ever start, Kotak Mahindra Bank would have never have started if they looked at ICICI Bank and looked at State Bank of India. Like that, in the growing economy, a new player can come, new player can also get business. So no doubt it's going to be competitive, no doubt all these players are there, but we are developing this. A management team sitting here, we always think day and night about your bank only, and we think about how to put new strategies to get in the marketplace, and I am telling you, we are getting enough victories, and you should not worry about it. So with that, Manik Saab, I finished your points also, especially for coming from Bombay. Demat trading account, sir, we have signed up with Zerodha. No, we don't intend. One of the key strategies for us to stay focused. So we will not get into insurance, we will not get into mutual funds, we will not get into broking, we will not do all those things. We are clear. We have a 5-year agenda, we have to deliver it. But as far as broking is concerned, we are tied up with Zerodha, and all our customers have access to Zerodha for broking accounts. So I'm done with all my comments. In case there is anything residual, if you'd like to shout out, we're happy to take it before we move on. Yes, sir. Digital initiative was a good question. My apologies, I might have missed that answer here. Yes, you're right. Even the digital initiative, we are opening accounts in locations where we are currently present. Because if a digital customer, after opening the account digitally, wants to come to a bank to deposit money, or withdraw money, they will not be able to do it. So we are currently offering in about 50 centers across the country is what the gentleman Amit Kumar tells me. But we will expand as the bank opens. We will also expand our digital business in many locations. Credit cards, we don't have credit cards today, but in the next by end of this financial year, we will definitely launch it. We are working on it. The systems are getting built. So am I done, ladies and gentlemen? Yes, sir. New business opportunities. Green initiatives. Green initiatives, is that a question? No, we are working on many of them. I must say that we are entering into toilet financing, for example. We are big participants in Swachh Bharat program, and we are doing many such activities. In terms of new business areas, let me just say 3 lines which are ready in our mind. One is we're going to launch credit cards. Secondly, we're going to launch more and more of our digital avatar of our bank, basically a digital accounts, digital loans, and so on. That's a big area for growth. Financings, rural areas through tractor financing and Kisan credit card is a very big growth area. We are going to do it in the times to come. Financing small entrepreneurs for 50 lakhs, 20 lakhs, 5 lakhs, 2 lakhs, 1 crore, really small entrepreneurs who are not even getting banking credit. They are all a big growth areas. And you'll be happy to note that 40% of the customers of the bank pre-merger, and now probably it's 30, were customers who do not have any credit bureau track record, which is an entire lifetime, when the customer is 25, 30, 40 years old or 50, the customer never availed credit, no bank gave them money. So we are the first bank giving the money in the first time, and that also gives us, brings us customer banking system, and then we convert them to our customers, and then we can sell many more products to them. So we have many growth areas. We have no problem of growth. Please don't worry. We will deliver on growth, and you will see this balancing the growth, because you will see one part of the bank is growing, another part is slowing down, which is the infrastructure. Blend growth you will see at a particular rate, but if you peel the onion, see inside, you will see that what is growing, and an important part is growing. So thank you very much, ladies and gentlemen. Thank you, shareholders. We really thank you for being here today, and very sincere thanks from all of us board members. And if any of you have to ask any questions of any other board members, kindly be free, and so is the management. Thank you very much.